Welcome to week 2 of Managerial Accounting, where this week we're going to dive into Chapter 16. Remember, just a quick review of last week, we looked at some new terminologies in the inventory category for what managers are going to want to look at when you're building a product. First, you bring in your raw materials, then you put in some labor, and then we also have the outside type, not direct labor, but we call it indirect labor, where you still need those functions to build a product, but they're not directly related to the product. And that would be like a janitor, that would be a supervisor, and then we have indirect cost as well. Materials that are used like glue or nails, there's still money that's involved there, and we've got to disperse that around. Otherwise, we're not getting the full concept of our inventory that we're making. So what we're going to do today is we're going to actually take the cost of building a specific job all the way from start to finish, and we're going to figure out how much that job costs, and we're also going to kind of revert back to our Accounting 101 days and learn how we journalize for each step in this process, because we've got to keep the cost building, and we're going to look at today building our inventory from step 1 all the way to the finish. And we're going to use some accounts that we looked at last week called raw materials, that's getting our stuff in the door, and then transitioning our raw materials into work in progress, and then also taking our labor costs and putting those into work in progress, and then moving those work in progress, like work in progress step 1, moving all of those costs then over to step 2, and then adding some more into step 2, some more assembly, then moving those costs into step 3, and so on, all the way to our finished goods. So that's what we're going to look at today with the examples that I have for you in your class and the resources. So this job costing, we're going to look at 2 different types the next 2 weeks. We're going to look at this week unique products, and we're going to look at those, and each individual job will have its own cost separate from a different job. And then next week we're going to look at more mass assembly, where lots of the same items are produced at one time. So job costing, some examples here, but I think the book provided some of these. The movie production. Each movie has its own set defined costs, and then once that movie's done, you move on to a different movie and they have their own costs. Same for some of these others like custom software or jewelry production. And accounting clients. Each client's going to have their own costs, and it's not going to be something like mass produced by any means. Okay, so what I'm going to try to do most of this semester is kind of put out a goal of what this chapter is hoping to help us to get to. And today, that's what we're going to look at for this week, collecting all the costs that we pay to our factory workers, to our salaried, say, managers, for our raw materials, even for the property taxes, and then we're going to distribute those costs evenly throughout. All right, so we're ready to get started here, and we're going to look at phase 1. Getting those costs into our first 3 main categories, because before we start separating them into jobs, we need to get the cost of actually what did it cost to buy the steel to make a car or the glue, and to pay our factory workers. Those initial costs have to go to a set category. Okay, so our raw materials, we're going to buy some raw materials. Doesn't matter what we buy, whether it's a direct material, something that's actually used on the car, say we're making a car, or if it's indirect materials, things that are, yeah, they're used on that car, but it's not a very big piece of the car. So we're going to debit everything to our raw material category, and that's another inventory category. And then we're going to debit all of our costs. Instead of calling it in Accounting 101, when we had wages for our typical worker, maybe it was an accounting worker, we would debit our wages expense. But when we're in the factory, we're going to hold off and not put it just in wages expense. We're going to assign it to a different piece of inventory and then eventually expense it out when we sell the good. So we're not going to put it directly into our wage expense. We're going to put it into this temporary holding account called factory labor, and then credit either cash if we're paying money right then, or a wages payable. But we're not going to expense our wage expense for our labor fees. And that's going to include any managers or people actually working directly on the item. And then finally, any other costs, because remember up here I did include indirect materials and indirect labor, but there are still a few items that don't get included in those first two categories, like depreciation. We're not just going to expense the factory equipment into depreciation expense. We're going to actually put that into the cost of the inventory. Maybe there's also property tax. We're going to put that right into our factory overhead, kind of a temporary holding account until I separate it out into the individual jobs. Okay, with this, we're going to start this running example. I'm going to break it into three parts, this ring bling example. So we're going to be buying stuff to sell or to further produce, and then to sell at our individual, each individual. So we're going to be selling diamonds, gold bands, and miscellaneous materials, because actually what we're making is wedding rings or engagement rings maybe. We're buying the bands, the diamonds, and then materials to make the actual ring. So what I have here, and you have this in your copy if you wanted to pull these numbers up, we bought $9,200 total in raw materials. So that includes our diamonds, our bands, and miscellaneous materials. So of course these are our direct materials, and then this would be our indirect materials. And then we have our factory labor, the cost of all the labor that was put into it. And then finally a few other items that were paid out. And I'm putting those into factory overhead. And so what I want us to be able to do is journalize these. And so that's what we're going to do first. I want to look at what do the actual journal entries look like, and then putting them into their respective T accounts. So now I'm going to transition here and switch screens into my Excel document. Okay, pulling that up. All right, now you'll want to have that Word file up as we go through to refer back to, and I'm going to have it up. You're not going to be able to see it, but just so I don't forget. Let me pull this down. Okay. Now, as we look back, when we bought our raw materials, I bought $9,200 of it, and so that's simply what I did here. Instead of just debiting plain inventory, I'm going to actually debit what it is, what type of inventory, and that's our raw materials. And that's going to be a holding account. I'm going to hold those materials in there until I take them out to start making each ring. And then I'm going to credit whoever I owe the money to. Maybe I paid in cash. It doesn't tell us, but we'll say it's an account payable and then to different various of our vendors. The second thing on our sheet was it said I had $6,000 in labor costs. Well, I need to keep track of those. Instead of debiting wage expense, I'm going to put it into another inventory account. So right now we have two different inventory accounts going. My factory labor. And I'm going to spread that out in a little bit, but for right now I'm just keeping track of those costs and putting them into a place where I can easily find them. We'll look at the T accounts here in just a second. And then notice I credit the payable account, just like I would if it was a normal wage expense. I'm going to still credit my wage payable. And then the last thing I had on our opening section here was the factory overhead, $4,500 worth. And I'm simply going to make a third inventory account and call that what it is, factory overhead. And again, I put in parentheses as an inventory account so we know where it falls in our accounting equation. It's an asset for right now. And then I credit each item that made up that $4,500. I had some money going to utilities, some for depreciation, not actually money going to depreciation, but hopefully you know what I mean by that, and then some money going to pay whatever other bill we had. Now I want to look at how this gets put into T accounts, and you're going to want to do this off on the side. And I put a T account sheet also inside the resources in your Blackboard course and it'll look something like what I'm getting ready to pull up, and I highly, highly recommend you keep track of these as we go. What I'm going to be doing, I'm not going to keep track of the credits. I'm going to, well, the items that we actually are paying. I'm not keeping track of like the payables, the wages payables. What I'm keeping track of simply right here is mainly our inventory account. Okay, so we have 3 different inventories going at this moment. We have the raw materials we bought, the factory labor, and the factory overhead. And then you see down here I've got room to start putting those costs once I get more information. And we'll be filling these guys in as well. As we start putting work into them, we're going to start putting some money into the work in progress, and then finally into the finished goods. Okay, I'm going to now switch back again. I'm going to switch back a couple times. This video will have a few switchbacks. And we're going to look at moving on to step 2. So we've now categorized a lot of our costs. Now we're going to start splitting them up as we begin to do work. As I mentioned, I think up here, we're going to be looking at 5 different types of inventory categories. We've already looked at the first 3. We looked at raw materials, we looked at the labor, and we looked at factory overhead. Now we're going to look at the final 2, work in progress and our ending inventory, or finished goods inventory, same thing. All right, so phase 2, we've collected the cost. Now what we're going to do is allocate our materials and our labor into our work in progress. And these are the easier ones because that's the direct materials. So I know if I put 3 diamonds in, I know exactly what the 3 diamonds cost. And if I put in my factory labor, it's usually a little easier than splitting up the indirect labor. After we get done with that, we are going to then transition into the little bit tougher, the indirect materials and indirect labor. Move those over into work in progress, and then finally our factory overhead as well. So our indirect materials and indirect labor will go into factory overhead very, very temporarily, and then all the factory overhead will be split up into each individual job. You'll see that as we go through here. But one thing we have to do before we can move on, or what a company needs to do before they can start allocating factory overhead, is the company needs to estimate how much factory overhead and direct labor are we going to have for the year. Because this is going to help us be able to know how much goes to each job based on how many hours did that job include. So if we're going to look at further down, if job A had 4 hours and job B had 20 hours, well, I want to split up the factory overhead accordingly. I don't want to put half in A and half in B because part A didn't take that long. Therefore, part A should get a lot less, and part B quite a big chunk more. So if I know I have $1,000 total in factory overhead, and only 10% needs to go into job A, then I can much easier do that if I have a nice estimate. Now it is an estimate, so it's not going to be exact, but it'll hopefully be close. So this is kind of what I said by doing the estimate. We're going to do our problem here based on direct labor hours. Now it could be based on anything. It doesn't have to be direct labor hours, but that's what we're going to use here. I think it'll make things hopefully easy to understand. So what we're going to do when we get to that point, when it's time to start dividing up costs, we're going to take our total factory overhead cost, what we think we're going to have, and divide it by the number of hours. So then I'll know, and this will give us a dollar amount, say $10 per hour. So for every hour of labor, we're going to put $10 cost into that inventory job. I think you'll catch on here as we move. Well, I first wanted to give just this little example to maybe make this just a teeny bit clearer. So we estimate our total factory overhead. So in my little example here, I estimated $30,000 in factory overhead. This is not part of our example. This is just something off to the side. $30,000 in factory overhead, $4,000 in total labor hours. And so now when I start dividing up our labor hours, and if, for example, I had job Z, had 15 direct labor hours, and I want to know how much of this 30,000 should go to job Z. I don't want to put half of it in job Z, but I also don't want to put 0 of it. That's 30,000 that I've got to account for. Otherwise, at the end of the year, I'm going to think I made money, but I have this extra 30,000 hanging over my head that I never applied to anything, and therefore I should have been charging more on my inventory. So if I took 30,000 and divided it by 4,000, you get $7.50 if you just do that little calculation that my little equation here tells us to do. 30,000 divided by 4,000 gives us $7.50. So for every hour that a job is worked on, $7.50 of this 30,000 goes to that job. So if 15 hours was on job Z, I would need to add $112 into that inventory cost. So I know I have a better estimate of what it truly cost, not just in direct materials and direct labor. All right, so here's my running example for back to our problem, part 2. I've used a total, this is total now, I've used 7 diamonds for job 101, 5 diamonds for 102, 6 diamonds for 103. Those are going to be easy for me to account for. If I just scroll back up a little bit to my first example, I know exactly what the diamonds cost me. They were $400 each. And now I know job 101 had 7 diamonds at $400 each. That's going to be easy for me to keep track of. And we're going to do the journal entry here in just a minute. And then we're going to separate out each job as we go as well. Job 101 had 3 gold bands, and then as you can see what each other job had. And then we used 150 in miscellaneous materials. And of course we're going to have to divvy out those costs as well. We had 6,000, remember back to my previous example of the total labor. It was decided that there was $3,500 in direct labor and $2,500 in indirect. Direct labor was allocated based on these amounts. And since the problem gave us this, instead of hours like in my previous little partial example off to the side that I just did, well, it looks to me like this one, we're going to be doing it based on dollar amounts paid for direct labor instead of actual hours worked for direct labor. That's fine, we can do that. And we can do that because we have these estimated numbers as well. We have total estimated factory overhead of $84,000 and estimated total direct labor of $42,000. So we can do this in our head hopefully real quick. If we do the 84,000 over 42, that's telling me that for every dollar that I spend in direct labor, $2 needs to go into factory overhead. It needs to be allocated. And we'll do that here in this example. All right, so with this information, let's go back to our Excel sheet now. You'll want to keep this up. One too fast. Okay, let's close this one. Bring up our Excel. Now we're ready for part 2 of our journal entries. We're going to look at our journal entries. The first thing I want to do is I'm going to wait till I get to the T counts to start separating them out per job. But for right now, all I want to do is take what I had in my materials. Remember, I lumped them all together, and that's perfectly fine. We can do that. I'm going to take all the materials that I just allocated, so the diamonds, the gold bands, and any miscellaneous items. I'm going to take all of those materials and debit them into a new category, take them out of raw materials. They're no longer in my raw material batch. I've taken them out, and I've started piecing together these rings. So if we look back to my, hit the wrong button. If I look back to my example, down here to example 2, it shows that I had 7 diamonds, 3 gold, or 7 diamonds plus 5 diamonds plus 6 diamonds. So let's add those up real quick. 7 diamonds plus 5 diamonds, that's 12 diamonds, plus another 6. That's 18 diamonds. If I do the calculation, 18, and if we remember back, they cost $400 a piece. So that's $7,200 in diamonds. Now we go down to gold bands. I had 3 gold bands plus 6 is 9, plus 8 is 17. So I had 17 gold bands. And if I go back to part 1, each gold band was $50. So 17 times 50 is $850. So that's where I got this little number here. If you add up the diamonds plus the gold bands, I'm moving $8,050 out of raw materials and putting it into my work in progress inventory account. This is remember, our 4th inventory account. So all I'm doing is just switching between 2 assets, actually 2 inventory accounts, taking it out of my raw materials and putting it into or into work in progress. Now that last little bit that I had mentioned, the $150 in miscellaneous materials, that's those small little items. Well, I'm going to have to divide those out, but I'm going to divide them out all at once. So we're going to add that into my factory overhead account. So I already had a factory overhead back in part 1 where I had some depreciation stuff and utilities. I had $4,500 in there. Now I'm putting another $150. Let's go ahead and look at that T account before we go to the next journal entry for my raw materials. Now ignore this for right now, but for right now I had the $9,200 in there to start. And then if I look back to that journal entry, I just credited $8,200. $8,200 was taken out of my raw materials, and that's what I just did here. And that $8,200, well, most of the $8,200, remember $8,050 of it, was put into my work in progress T account. The remaining $150 was put over here into my factory overhead. So the $8,050 plus the $150, a total debit of $8,200 equals my credit here of $8,200. Now let's go back to my journal entry. So we've taken care of the materials in example number 2. Now I'm looking at my labor. Remember I had mentioned that 3,500 of it was direct labor and 2,500 was indirect? Well, the direct labor I can go ahead and put right into work in progress. But the indirect labor, remember that's like the supervisor salaries, maybe maintenance to fix machines. Well, I'm going to have to split that up amongst all of my jobs. So I'm going to do that later, just like these indirect materials. So I'm going to put any indirect costs temporarily into my factory overhead, and then I'll divide it out soon. But I can go ahead and put 3,500. I know exactly where those costs are going to go. I'm going to put those right into work in progress and simply take it out of my factory labor account. Remember that this was our number 2 inventory. And I'm starting to put a lot of these costs now into work in progress. So my work in progress, I just put $3,500 into my work in progress. I took it out of my factory labor, the $3,500, and also what came out of factory labor, I put the indirect cost, the indirect labor, temporarily into my factory overhead. Now again, I'm going to, in just our next step is taking all of these costs and then dividing them out where they need to go once we get to that point. Okay. Now, our last thing, it tells us how the costs, or how our labor costs were divided out between Job 101, 102, and 103. So the first thing I want to do, and I've already talked about this, but we need to, I'll go ahead and spell it out here. We need to allocate our factory overhead. I took my total estimated factory overhead and divided it by my total labor. Remember, for every dollar of labor, I'm going to put $2 into that job for factory overhead. So that's going to be our last step here for this example. Remember, I didn't quite spell out how I did this, but I think you can see I had $3,500 in direct labor costs. Well, I want to multiply that by 2. For every dollar direct labor, $2 needs to go into factory overhead, or needs to go into the job. So I'm going to take $7,000 out of my factory overhead and now put that into my work in progress. And that's what I'm doing here in Part 2B. So Part 2B, everything over here still stays the same. 2B is I added up all of my factory overhead and I got $7,150. Well, I'm going to take now 7,000 of that and move it into work in progress. So now I got a total of 18,550 in my work in progress, items that are being made as we go. All right, let's go back to Part 2A now. And now that we've got our accounts set up and we've got the materials going out and labor going out, let's now start dividing some of these costs into their appropriate jobs so I can keep track. How much did job 101 cost? Because when I go to sell it, I'm going to want to know how much cost needs to go into job 101. So let's look back to our example again. We had 7 diamonds used for 101. 7 diamonds. Remember, they were $400 a piece. So in direct materials for job 101, 7 diamonds at $400 a piece, I have $2,800 wrapped up so far in job 101. Now gold bands, there were 3 of them. Back in my example, 3 bands went for job 101. So more direct materials, $50 a piece, $150. And then finally I tell us down in the direct labor part of our number 2 example here, $750 of labor was used for job 101. Now I'll do the same thing for job 102 and 103. I had 5 diamonds at $400 a piece. And as I'm going through this, if something doesn't make sense or if you need more time I'm kind of going through this, so for those that are familiar with this step, you can quickly get through to the next step, but pause it and then go through and see if you work out the same numbers as I get. That's the only way you're really going to learn. If you just listen and write down the numbers and then don't really check to see if you could get it yourself, it's not going to really help. So each time as we go throughout the semester, pause it. Even if I don't say it directly, pause it, see if you get it, and then move on as we move on. So we had 5 diamonds at $400 a piece. We had 6 gold bands, it tells us, at $50. And then the $1,250 that was shown in our example. We do the same thing for job 103. If I total this up at this point, I get $11,550. And if that number better equal what my work in progress is so far. My work in progress is also, if you would total this up, it is also $11,550. Now let's go on to Part 2B, where we start splitting up now our factory overhead. So now out of the $7,150, I'm going to split up $7,000 into each job. That's going to be a big chunk of the cost is actually factory overhead of these rings. You'd think the diamond would be, or the gold band, but no. It's actually the factory overhead. It's going to be a huge expense. that I'm allocating, at least for this example. Now we go back to my journal entry part 2, and it tells us for every $2 of for every $1 of labor, there needs to be $2 of factory overhead. So it tells me in the example, if you go back to your Word document, that there was $750 of direct labor for 101. If there was $750 in direct labor, that means times 2, $1,500 needs to be going to factory overhead. So the total cost for job 101 was $5,200. That's what all the costs wrapped up cost to make that particular job. Direct labor, there was $1,250 for job 102, so that means $2,500 multiplied by 2 for factory overhead costs. And then job 103, we had $1,500 in direct labor, so $3,000 in factory overhead. Now I know exactly how much job 102 is going to cost. So when I turn around and sell it, I'll know to apply the appropriate markup to this cost, not just say these 3 items and then forgetting the factory overhead. When I add up everything, I got $18,850, and that's all of my jobs in process, so that better be what my work in progress is. It's kind of a check figure. And yes, it is. It's $18,550. Okay, I'm going to now look at the third, our last step. We've got everything in progress. Now we're ready to move it over into our finished goods and get ready to sell it. So quick recap here, work in progress. We're accumulating all of our jobs into one work in progress T account, but then off to the side we're separating out the cost individually. Kind of like what we did in Accounting 101, where we had one big AR balance, but off to the side we knew who each person was in that AR total sheet. We had a specific individual AR for each person, so we knew who to bill and what. The last phase here, phase 3, completing the job. We're going to move everything out of work in progress and put it in the finished goods. And then once we sell it, take it out of our finished goods inventory and then the cost of goods sold. All right, so our last bit of instructions here. We sold jobs 1 and 3. So number 2, we still haven't sold yet. But jobs 1 and 3 are done, and the customer pays us. It tells us what we were paid for job 1 and job 3. So let's go through first and journal and post these transactions, and then we'll get to the rest of these items. So one last time here, I'm going to pull up my Excel document. Go to my journal entry answers part 3. Now, the first thing I'm going to want to do is take everything out of my number 4 inventory, work in progress, and move it into finished goods. But I'm going to want to do it one job at a time. As soon as the job's done, I want to take all of that cost of that material out of my work in progress and into finished goods. And the first thing you may think is, how did I know $5,200 came out of my work in progress? If you need a second, pause it and try to figure it out. Well, that $5,200, if I go back to my part 2B where I'm looking at the job 101 costs, if job 101's done, I need to simply look at how much did job 101 entail. It entailed $5,200 worth. So that's where I get that $5,200, taking out of my work in progress and putting it into my last inventory, my finished goods. And I do the same thing for job 3. Job 3 is now done, and I'm taking it out of work in progress. I go back to my individual job sheet. Yep, cost me $7,300 to build this item. So I want to take that $7,300 out of work in progress and move it into finished goods. So here's my my T accounts. Took the 5,200 out of work in progress. I put it into finished goods. I took the 7,300 out for the job 103 and put it into finished goods. Now it tells me I sold the stuff. All right, let's, it told me I sold job 101. I'm going to pull back up my, you won't be able to see this, but you need to have it out so you can see it. It says I sold job 101 for $7,000. So going back to my accounting 101 days, what did I get? That's my debit, cash. Why did I get the cash? I made a sale. My credit question. And remember, when we sell something, there's always two journal entries. The cash that was made, and then I need to show that I got rid of my goods. I got rid of $5,200 worth of job 1 goods. They need to be taken back out of finished goods because I no longer have them. They were only there very temporarily. And I do the same thing here for job 103. Go back to see what did it cost me to sell 103, or what did I get for 103? I got $9,500. So I do a second journal entry just like this first one, showing that I brought in $9,500. What did I get? Cash or AR maybe? How or why? Because I made a sale. And then I know that that item cost me originally $7,300 because I added up all of the costs that went along with that particular job. I had the direct materials, the labor, the factory overhead was allocated. And now if I look back, I say here we had 150 debit balance in my factory overhead. Let's look at that real quick. So remember I had it totaled up to $7,150 in total actual costs, but I only distributed 7,000 of that, so I had 150 left over. Technically, I would need to go ahead and distribute that other $150. So we slightly underallocated it, and when we were all done, we would offset our final cost of goods sold, add another 150 there. But this gives us a pretty good clue that job 101 really did cost me $5,200, maybe just slightly higher than that, but we can offset that at the end of the period, at the end of our time frame, whenever that would come. So the last thing that I did here is I made some T accounts for my sales revenue and my cost of goods sold. Remember, I brought in $7,000 and $9,500 on those two sales, less what it cost me to make those, the cost of goods sold. So I've just now then answered one of the questions that I asked is, what was the gross profit of these two items? It was $4,000. So that was question number 3. Question number 2, what is the ending work in progress? I should be able to simply look back to my T account. If I took the $18,550 from where we left off and then subtract the two items that are now finished, I'm left with $6,050 in work in progress. And that better be what job 102 is, how much job 102 total is. And sure enough, it is, because that's all that's left is job 102. So job 102 is $6,050, and that's what I have in my work in progress. The last thing that I had as a question, was factory overhead under or over allocated? Well, we answered that. It was slightly under allocated because I didn't quite use it all. I still have a little bit left there in inventory that I will need to allocate at some point, but it's a very small amount, and I can easily take care of that at the end. Okay, I have a second example. I'm not going to go through that at this point, but I will make. I'm going to look through, and if need be, I will make a separate short video on any Wiley Plus problems. But I'm going to leave off with this one as it is because it's long enough, and then I'll look at any Wiley Plus in a second video. Okay, if I don't, we'll see you back in week 3 for very similar to this, but just a little different because we're doing mass inventory.